Welcome to another episode of the Free Toaster Podcast. I'm your host, Carlos Caro. I'm here with Zach Ali, the General Manager of Finder's U.S. Business. Good morning, Zach. Good to have you on the show.
Good morning, Carlos. Thanks for having me.
Yeah, so let's just start off with Finder. I actually have gotten maybe 3-4 lenders ask me about you guys in the last 12 months, and I've been able to give them fairly generic, high-level answers based on my knowledge. But I'd love to spend some time digging there. Can you walk us through at a high level, like the categories you serve and maybe like a brief story of the company?
Sure. Yeah. So Finder was founded in 2006. We actually just had our 20th anniversary as a company in Australia, which was really fun to attend. But yeah, the US business launched in 2015. It started predominantly credit cards, then loans, insurance, brokerages, home loans, basically the gamut of financial products, which we still do serve most of those niches. But yeah, it's a financial comparison site. We look at the best offers on the market. Actually, it's not always the best. Actually, we get every market offer on the market and try to compare them so that folks who are researching, what loan to take out or what brokerage app to use, they're fully equipped with the right details and a good comparison so that they can move forward with confidence. And this is something that is basically the ethos behind our company, is helping folks win at money and helping them find a better deal. So that's why we sort of do the full market comparison. Our biggest niches at the moment, or I guess what we're probably most well known for in the industry, would probably be our, brokerage apps, investing, savings, lending categories,
Okay.
And a little bit of early wage access. So your cash advance apps as well. We do a bit there. Crypto as well. Not as big these days, but maybe it's returning as we see sort of in the market. But yeah, we kind of do everything in finance, but it's a very consumer centric company. So we have editorial independence. Everything we write or discuss on our platform is geared towards the reader. So we aren't going to necessarily be driven by who pays us the most, but whether or not what we're talking about is the right fit for you. And so that's sort of the company sort of mission there.
Got it.
But yeah, so that's sort of Finder in a nutshell. Recently, we actually launched something called Finder Rewards, where we actually will pay our users for making good financial decisions or for going with a product on our site that best suits their needs. And these are pretty meaty offers. So, for example, we had one offer running recently with Chime, where users who took out a bank account with Chime would get $300 from Finder. So it's actually us providing you with the money, not the partner, which pretty much blew up. And a lot of folks, I think, we're happy to get that.
Got it. I want to break down because I'm guessing a lot of our listeners are curious about the scale you might have in certain categories. Specific ones that jumped out as you were describing the platform: personal loans. I talked to a lot of lenders in that category, so I'm curious there. Also curious around that earned wage access or like credit builder category. I think you guys are unique in that. I think you, at least based on what I've seen in recent memory, you list the credit builder products separately from like the core loan products. And I think that I can see a lot of reasons you might want to do that. But can you give us a sense of the scale across the lending businesses that you operate in?
Yeah, so I'd say that's actually probably close to 40 or 50% of our business is in the lending category.
Okay.
We have a pretty strong foothold in, early wage access, as you mentioned, personal loans, business loans. So those are sort of the three strongest lending categories. We also are in mortgages, which is sort of like the cherry on top. But due to some of the RESPA regulation, we've sort of pulled back there a bit, but because it's become harder to optimize. But yeah, we're pretty big in loans. I'd say close to 40, some months, 50, 60% of our business is in the lending space. Yeah.
Got it. And as far as like scale of like, what does that mean as far as like number of clicks, number of applications? Can you give us a sense of like absolute scale too?
I don't have the exact numbers, but I can give you, roughly, I guess at a percent level of how much we're sending. So let's say we're sending out 100,000 clicks a month. If lending is doing 40 to 50% of the business, you can sort of
Gotcha.
imagine how much that is. Yeah.
All right, cool. So let's pivot to something I've been writing about and looking at a lot, which is, and you've commented on some of your podcasts this year, which is the whole SEO meltdown, right? So like Google changed a bunch of stuff in the last 2 to 3 years. It's caused probably like the AI answer. Like there's a whole bunch of reasons. I don't want to rehash. I'm going to link to a couple pieces I've written because I've gone pretty deep in the past on like why SEO has changed. But I guess what I'm interested in hearing from you is, what do you think the boardroom conversations at US affiliate publishers is looking like today? Like what are the places where publishers are excited? Where are they worried? What are they actually doing day to day? Because I hear all the headlines around, yeah, SEO tough. Um, but I'm trying to translate that into like a so what? Like what does this mean pragmatically to a lender? And what we'll get to in like how should lenders be partnering with you today in context of all that's going on. But let's just start with like State of the Union. Like what are some of the themes you're seeing at the highest level?
So I think it depends on who what the executives' idea of what SEO was supposed to be for their business was in the first place. Like if they're just full on, we're a performance business, everything's performance revenue, everything's performance marketing. The SEO situation right now is not great for them. They're probably pulling resources from SEO and reallocating that into other channels, primarily paid, as we've seen the CPAs start rising as the zero click sort of search environment is happening.
Mm-hmm.
For the more, I guess, more well-rounded executive who's willing to play long-term games, I would say they're understanding that reputation is playing a larger role in the landscape of SEO. And what I mean by that is if someone searches your brand, the information that comes up in that AI answer, is it what you want it to be? And so that's where we're seeing a lot of the AEO, which is the answer engine optimization, come into play, which certainly Finder does some of that for some of the businesses we work with as well. But there's two tracks. So it's like if you're just super performance minded, you're probably not super hot on SEO right now. But if you understand its sort of position in the connective tissue between in performance and brand, you're probably really looking to dive deep there to say that, hey, when someone searches is, Lending Tree legit or something like that, that what comes up is favorable, right? And your reputation online lends itself to folks clicking through to your website. And the only way to do that is for there to be enough highly credible sites out there referencing you and speaking highly of you and your product.
Got it. At a category level, I'm fortunate to see this from a lot of different angles. I have friends at publishers, and I have lenders I talk to on a regular basis that invest in the category. My high level optics on the last 3 years has actually been a world of expansion. I actually think lenders on balance are spending more in this category than they were 2 to 3 years ago. Do you agree with that synthesis, or do you think that the SEO impact has actually shrunk the category at the highest level?
I think the increase in investment could be also related to some market tailwinds, right? So consumer debt is like reaching all-time highs in credit cards. Like there's a lot of reason to, I think it was like 1.28 trillion
Yep.
in Q4, but and APRs are getting higher. So there's a lot of tailwinds that would cause you to invest in every channel. Do I know if SEO is getting a disproportionate amount of increased investment compared to, say, SEM or meta ads or wherever else they're playing? I'm not sure, but I definitely have seen the increase in demand, right? So Finder has seen it ourselves. We're seeing our categories sort of in lending expand a bit in terms of sheer volume coming through. And we've also heard from our partners of wanting more traffic. Hey, how do we get more? And wanting to work with us on that
Got
level.
it.
Yeah.
When you mentioned earlier the kind of a paid from SEO, what I'll call organic, and I actually have a troubled relationship with the word organic. I think you might too, based on some of the things I've heard you say. But anyways, we're not going to go down that rabbit hole right now. But as folks pivot from organic SEO to paid, um, what I would start to speculate as a lender is like, oh man, these folks, these publishers were getting their traffic at, let's just say, at lower unit costs.
Mhm.
Because like when you're top 10 on Google and you're not paying for it, the economics of that are like quite good, right? Assuming you haven't overspent on your content team. And then the proposition changes, and now you have to pay to be in the top 3 slots to get noticed. You're paying for every click. I have to imagine margins get materially compressed, and that would have an impact on what publishers would charge lenders on like a CPA or a CPL basis. Is that tracking with what you're seeing in the industry? And if so, like, how are lenders reacting to that adjustment?
Oh, totally. We've seen CPAs compress, not by so much, but it's a little bit over time. I think we're seeing them pull back a little bit more, which for the comparison sites like Finder and the middlemen sites who are sort of connecting the reader to the direct lenders themselves, um, the harder it is for us to justify the spend, right? So when you're doing just performance sort of marketing, you don't necessarily have LTV metrics the way that a lender does, right? So they can operate at a loss knowing it'll be positive in the long run. Where when you're paid on just the click, it's like you can't really operate in the loss because there's no recurring revenue for you on that front. So yeah, I think it's gotten more competitive. It's getting harder to justify some of the paid spend. So it's like how the best keywords in the market are the ones that are going to be the most expensive. Well, if the CPAs get compressed too much, it no longer makes sense for that publisher to bid on that keyword. And so you have to rely purely on your brand strength and the customer's ability to say, okay, I'm just going to go straight with you. I'm not going to do any research at all, which is an unlikely scenario to get that click. So I actually think what's, I think what's good for the publisher ultimately ends up being good for the brand as well. And so there's that balance that I think on the brand side or the lender side that they have to consider when working with publishers. Yeah.
One thing I talk about a lot on this pod is building empathy for publishers. And I think you're the second GM on the show from a publisher, which I always love people in the audience to hear it straight from a publisher versus to like have to take my word for it. Although I have been a GM at a publisher many years ago, so I have my unique experience there. But I guess I'm curious to hear from you. In 2026, what are you, or do you think other GMs at affiliate publishers focused on? Where are you spending your time? What metrics are you going after? What types of partnerships are you seeking? Like, give us a bit of a feel for like what a day in the life of Zach looks like.
Right now, brand is playing a much more central role in the strategy, right? So AI is sort of commoditized written content to an extent. And it's because it's so much easier to create. And, there's definitely the expertise and authority concerns that Google has to try and rank you. But SEO has changed significantly to the point where publishers have to focus on being on every surface, right? So we have to be on YouTube and we have to be on social and we have to be on newsletter and we have to be on ChatGPT and Google. So we have to expand our surface area so that enough folks online can actually find us. And when they find us, and this is the key part, they have to actually enjoy the experience. And so from the publisher end, we have to put the user first in a way that I guess someone who's offering the product itself does not always, right? Because if someone's thirsty and you sell water, it doesn't matter if they like you or not, they're going to buy the water from you. But for the publisher, we're actually the recommendation engine. So we have to be credible with our recommendations. We have to make sure that the user, when they come to our site, and we connect you with a lender or a brokerage app or a savings account, that you had a good experience and that at the end of that experience, you were thinking, hey, I think I would come back to Finder next time I need a financial product of some sort. And so because that's such a big consideration for us, now more than ever, we aren't always able to accommodate the sort of demands of the people we're working with, right? They want us to push a certain way or do this. And it's like, look, we can make you happy in the immediate and shoot ourselves in the foot long term, or we can kind of push back on you a little bit now. But in the long term, we build a much stronger relationship together one where we can grow, and one where you can actually get direct feedback from us on how customers are receiving your product. That
Yeah.
can help you. Yeah.
Yeah. Yeah. It sounds like you're pushing on attention. I am very aware of, which is I call it the tension between giving and asking.
Yeah.
I don't know if that resonates with you in the
Yep.
context here, but like when you're playing the long game, building brand and audience, you just give like hell, right?
Right.
You give value, you help where you can, you connect with your audience, you take every call at least as a B2B founder. In a consumer context, it's a little bit different. In your context, it's like the best possible advice, the best possible content, the most
Mhm.
objective voice. When you're asking, you're pitching, you're saying, buy
Right.
my shit, here's why, buy my shit, here's why.
Mhm.
When you're in that asking place, yeah, your financials can look good for a month or two, or even
Right.
three. It's not going to look good in 12 months or 24 or 36 if all you've been doing is asking. So,
Right.
like, is that what you're hitting on, or is there another theme embedded there?
Yeah, no, that's it. That's it.
Yeah.
Was just like you can't push too hard on that front. Like and you also have to like sort of on the I guess on the partner end to ask, I guess, to understand who the finder customer is. Like there's that dynamic of it. I think sometimes you'll see folks enter into the affiliate space and performance space and say, "Hey, I want someone who can deposit 200K into their bank account." Right. And it's like,
Mm.
well, you haven't even asked me who our reader is or who our consumer is or
Yep.
how we can actually help you. And if this is right publisher product
Yeah.
fit, because we want ultimately the win-win-win situation. We want the partner to be happy.
Yeah.
We want to be happy. And we want the reader to be happy. But there are some publishers who just totally ignore that fact, and they're performance managers. They want what they want, and that's it. And there's some that are saying, okay, well, here's all the products we offer, and how can we position them across your properties to build sustainable relationship over the long term. And so there has to be a bit of give and take. And so sure, could we push this one product that you want? Probably. But if the partnership hinges on us providing that at the expense of our own business, then it's just not going to work for
Right.
us.
Yeah.
Yeah.
Yeah. Um, I heard you talk recently about YouTube. Sounds like you're really bullish on YouTube. Can you walk us through the thesis and how that plays out kind of pragmatically for you guys at Finder?
Totally. So I think this goes back a lot to the building relationships with your customers, but also with AIO discoverability. So searching in the answer box for LLMs. But YouTube and Reddit seem to constantly trade off spots for what's the most cited external platform in Google. Reddit, if you try and game Reddit, that community is going to find you out immediately. They're going to call you. It's going to do more harm than good for you to try and game that system. YouTube, you can actually direct what you work on, what you say, like the brands you talk about. Say, you can say it in the way that makes sense for you, whatever, and that tends to show up because it's such a not necessarily performance driven channel that there's still a lot of opportunity there so that's why Finder's been playing on YouTube.
Mm,
And people also always talk about the lead quality of LLMs.
mm.
The lead quality of a YouTube lead and conversion rate of a YouTube lead, let's just say that's something I hope my competitors don't discover.
Got it. Yeah, no, I think I saw you share the CPE, the RPCs or the EP. Yeah, they're mind blowing. So yeah,
Yeah.
no, I suspect it's a lower base, but very 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 high intent. Um, so in the context of your business, so like I always imagine YouTube. I mean, YouTube works well for me, right? Like that's why I made the decision this year to flip the pod from audio only to video
Yeah.
because it's just going to play much better on YouTube, YouTube Shorts, etc. And I can repurpose in LinkedIn. I can do a bunch of stuff with it. But in your context, Finder as a faceless, at least as far as I have seen, I haven't seen a face of, I haven't seen a celebrity. Um, Walk us through pragmatically, what are you doing in YouTube? Who's speaking? What's the content? How do I find that video? What's the CTA? Like I'm very curious how a publisher like Finder leverages YouTube.
So it was last March that we actually decided to really reboot the channel. And so I love YouTube. I'm a YouTube watcher, and so we started this thread in our Slack with the editorial team and the marketing team, and we're just like, here watches YouTube, and we started talking about it and what we like about it and how you grow it and why it's such a what why we again why we personally like it, so why it could be a good channel for our readers if we do it correctly, and so we decided to launch, and we made a very intentional decision to go with just one niche to start, and that was investing because a channel has to have an identity, and especially in finance, you can't be the most of YouTube's traffic comes from the homepage recommendation feeds. Like
Mhm.
once someone knows what you like, they want to send you traffic
Yep.
directly to that homepage. Um, so if we were doing a video on brokerage apps, Robinhood Gold or something like that, their new subscription product, and then the next video they see from us is about mortgages, which is totally unrelated to what the customer wants, we would never figure it out. So we were like, look, we're going to go one niche. We're going to go deep on that niche, and we'll expand slowly once we feel like we've started to build relationships and
Uh,
community. And so we're kind of at that point now where we're ready to expand into the next sort of the next niche that we were going to bring into YouTube. But it took a while. And so we had our investing editor. We really think, and this is something I personally believe a lot, that the editor of a niche can't just be someone who looks at the written content. Like you're actually the niche messenger. Your
mhm.
job's just to reach the consumer however you need to reach them. It doesn't matter if it's through the written word or through a YouTube short or through a TikTok or whatever. It's just about making sure that the person that you're speaking to gets the right information and meeting them where they're at. And so we had Matt Mixolsky. He's our investing editor, and he does a great job. He really took to it in the beginning, just like going really hard on it. And he's sort of found his rhythm, and our videos are starting to get thousands of views every time we post, and some sponsorships are reaching out to us, and so it's starting to grow. But we had to really be intentional about like we're going to form a base first. We're going to do one niche, even though we're across all these niches. We need to get people familiar with Matt's face and that thumbnail every
Mhm.
single time,
Yeah.
so that that trigger happens, for the
Okay,
other
so
person.
one of your editors is the personality. That's who people are kind of associating here.
I want to pause here for a second to tell you about one of our sponsors, Spinwheel. They've built an API that streamlines your lending application form with just 2 fields. When a customer shares just their birth date and phone number, they can go grab all the information needed to pre-fill their application form. So regardless of what channel you play in, you know that the higher the application rate goes, the lower your cost of acquisition becomes, and the more media you can buy to generate growth. Additionally, they can give you real-time verified consumer credit data and seamless payment processing, which can help you serve customers beyond the initial application. To see a demo, go to spinwheel.io or check out the link in the show notes. It'll hook you up straight with their head of growth.
Man, every time I booted a new channel from scratch, whether it be actually, I didn't have to boot LinkedIn from scratch, fortunately, because I had been on the platform for many years. I probably like a decade plus. So I had like 2,000, 3,000 followers when I started writing. So from the very first post, like I had distribution. But Twitter, Substack, podcast, oh my God, Zach, like the first 20 episodes, it's just like you're putting in all this work,
Yeah.
your team's excited, and then it's just cricket, like jack shit is happening, at least in my experience. How do you get an organization through that early period? Like, what are you telling them? What do you guys like? Give us a little bit of insight on how you boot from scratch, because I know it's the hardest part.
Really, I think it's to go in there with the expectation that the stakes are low. They're as low as they're ever going to be in the beginning. So it's your it's your opportunity to just try new things, to not be so polished, to just get something out there on the internet. Realize that you're not metaphorically built of glass and you won't break if something's wrong and the thumbnail doesn't look great or the editing isn't perfect. And so getting the volume in the beginning and the consistency down,
Mhm,
and actually defining consistency as the definition of success to begin with was sort of how we played it. Was like,
mhm,
look, it's not our subscriber growth, it's not our click-through rate on our thumbnails, it's not the revenue it drives in or how many sponsorships we have. In the beginning, it was just, did I post a video that week?
mhm,
And that was the definition of success. Now, once you feel like you've sort of gotten into a good cadence, you've mastered the posting
mhm,
part, you layer in a new metric. So now it is about subscribers and click through rate, or now it is about
mhm.
this next part of it, and then you get that part down, and now you just kind of build on it from there. But if you're expecting it to be a banner channel overnight, you're going to get depressed because it's not really. That's just not how these work.
Yeah. So it seems like just looking at your LinkedIn background, seeing your content, it's very clear to me you have marketing in your DNA, distribution, content. Like you just kind of get it. You're wired that way. I've seen Jay, one of your founders, also seems wired that way. I don't know if he was like that at the beginning or if he's like, kind of developed that over time. But I guess my question to you, a lot of the folks I talk to at publishers or at lenders work in operating environments that are highly analytical, where the CFO has a very heavy hand in what gets done or not. And when investments get made, let's say 10 YouTube videos get produced, a dollar amount went into those YouTube videos, an amount of time went into those YouTube videos. And if I don't see results within a certain pretty short window of that investment, I start not just the CFO's office, but the organization at large starts to wonder and worry whether we're wasting our time and our money. How would you advise an organization that's not quite there in their DNA on content to lean in and give it the chance it deserves to succeed?
So it is actually funny you mentioned Jay because he really was the cultural force behind why we were willing to do things without always ascribing a dollar amount to it. So that in the DNA of Finder is one of our values is go live, and that's just put something out there, see how it happens, get the feedback in, do the whole sort of lean startup methodology of iterate and pivot or persist,
Mm-hmm.
that whole part. But we'll never, everyone has a master plan until it doesn't go the way you planned, right? So it's like, you can't actually plan for these things. You actually just have to invest the time into creating good content and know that if you put the effort in and you actually, put your sort of mind, body, and soul into this, and you're of service to someone else, you're able to add value at scale. The results, the revenue, the dollar signs, that's the output metric of your input metrics, which is the
Yeah.
work that you do. So that is sort of the mentality we took to it as well. Like, and I think that you have to bring into these sort of executive rooms is like, look, we can play the short-term game and never grow and never adapt to the future, or we can try and mix in some long-term strategy there that allows us to survive the next 10, 20 years. But that doesn't happen on living month to month in sort of your strategy,
Right.
which is just, yeah.
Got it. You back to kind of tactics in the channel. Is it Adam, like the creator that's on YouTube that you mentioned?
Matt.
Matt. Okay, Matt. So when Matt's posting, is he like answering questions he sees on Reddit? Is he promoting a specific brand that's on your platform? Like what's the nature of the content and like how does the content connect to monetization?
So again, because we're so reader first, we at the beginning just did a bunch of platform comparisons. That is still what we do is platform comparison. So Robinhood versus Webull, Robinhood versus Fidelity, is SoFi Plus worth it? We did a bunch of that type of content, and whatever resonated was the stuff we would double down on. So Robinhood, became a big one. People are always wanting to know if Robinhood's legit or if it's a good
Mhm.
platform to use. Had the whole GameStop fiasco
Yeah.
during COVID, but COVID is also when everyone started deciding they were a retail trader. And so we've found, okay, people really like when we talk about Robinhood. So we're doing a lot more Robinhood stuff because that's what customers seem to like. We're also mixing in, Webull reviews and SoFi reviews and Fidelity reviews, but we let the sort of community guide us. There's a bit of audience capture on both ends. We're creating the content to try and capture that audience. But once that audience tells us what they like, they're sort of capturing us in a way and saying, hey, do more of this. And so we're trying to let them steer. That way we actually build the true relationships with them. When they have a question about some product, they know they can trust us because they've grown with us and they've been a supporter of us, of our
Hmm.
content. We're not just this like informational YouTube channel that they have no emotional attachment to.
This raises a thing I hear a lot about, or a worry I get a lot. Maybe it's not so prominent in investing, but I hear it a lot in lending. Which is how do you govern what the influencer says? So for Matt to do his job to make a compelling video, I'm guessing he just has to riff and give his honest opinion on whatever he's
Yeah.
talking about. Because if it's highly scripted and curated and like the corporate overlords or like words like that video is gonna suck. Like you don't have to tell me anything else. I know that video won't perform. So how do you guys handle compliance and feedback from like advertising partners, and like how does that? And I'm curious specifically in lending, or maybe you're not even there yet on lending, but uh, any thoughts on like that compliance question?
Yeah, so because we're editorially independent, it's highly possible we won't be able to put your links on some of our videos. But you're also then going to miss that super high intent customer that is in the market for your product and primed to take
Mm,
out whatever you're offering, or at least an easy way to get them. But my thing about compliance is, look, if you need us to add your disclaimer or whatever you on that front, we'll add it in. I think one, it keeps you legally protected, but at the same time, the reader is, the reader, the watcher on YouTube, they're trained to just overlook that stuff anyways. They're not going, hold on, let me read the fine print.
mhm.
None of us read the terms and service when we update our iPhones or our Androids or whatever. Like on that front, the compliance part of it doesn't make a big difference at all. It's when they start to steer, hey, you can't say where we were founded because we don't want that information out. When the overzealous sort of approach starts to come in and there's no actual legal basis, they're just trying to steer us because under the guise of compliance, that's where we do a lot of pushback. And we honestly will push back to the point of saying, well, we'd rather not do the video, or we'd rather not mention you at all in this best list
Mhm.
roundup if we can't be true to the customer. Again, that has to be our ethos for us to survive. We can't be so partner facing that we've become an ad, basically we're just, people see us as a walking
Right,
ad. Yeah.
right. So I want to pivot to advice you might have for lenders.
Mhm.
This is one of the more common questions I get in my business is, hey, I want to approach the following publisher. Insert name. Could be Finder, could be Credit Karma, could be anybody. How do I put my best foot forward in that pitch? What information do I share? How do I position my products, my brand? Can you walk us through what good looks like when a lender publishes you, approaches you, and they have some information to share? They want to get on the platform. Like, what are you normally looking for?
We try to hopefully avoid predatory sort of terms. So like if you found a loophole to offer more than whatever the 29.99%
Hmm.
rate or 30% rate, we probably aren't going to have the nicest things to say, and not maybe, but it will still be objective. Like it's not going to be like, hey, they're whatever. It's going to be like their interest rate is 2x, 3x the national average, right?
Mhm.
Or so I think if your product is not, um, how does it stand up in the rest of the sort of space you're in? And if you have something that caters to subprime borrowers, be upfront with that. Like say, don't try to position yourself next to the SoFi or the Lightstream if you're looking at the lower sort of credit buckets, right? Like say, hey, look, we're like an op loans, or you reference yourself so that we actually understand where you sit in the market. I think a lot of times they'll come to us and be like, hey, we want to be on your comparison table, and we want to review, and we want
Mhm.
all this. And then when they realize their finder, we have a finder score, which is again editorially independent. We have our criteria, our methodology that we go through, and they're like, oh my gosh, why is mine so low? Well, it's like, well, you didn't give us the correct sort of idea about you. You wanted to position yourself here where you're going to have a low score because your competitors in the market are, offering these. But if you position yourself here, you'll probably have one of the best in that sort of segment. So that's the sort of that's most helpful to us, and also just to be very forthcoming with your rates, your details, your state availability. As much the less research you put on our team, the easier it is for us to focus. How can we position you, and how do we whatever? But if it's just a fact finding mission for
Yeah.
90% of the for us, it's going to be hard. Yeah,
Yeah. So far I'm hearing transparency on like rates and terms, all of that.
yeah,
Transparency on coverage, what states I play in. Transparency and like, hey, no kidding, these are the types of audience I'm after.
yeah.
Here are the people I think I compete with. So that you're framing it in like the right bucket. How important to you is to have an understanding of application rates, approval rates, like EPCs, all of that's like. And would you even try, like, if I showed up representing a lender and said, hey Zach, here are their EPCs and their funnels, like, would you take it seriously, or would you be like, this is nonsense because every time somebody puts this in front of me, it's wrong, and when I run it in market, I get like a totally different answer.
Um, well, again, we want to compare every product on the market
Yeah.
so that the person who has heard about you through some other channel you're advertising, when they come to Finder, we have you and we can give you the fair assessment. Um, it just may not mean you get prime real estate on our compare table or on our compare table at all. You might be a review only partner.
Mm.
But yeah, I think look, the on the commercial side of things, we definitely have our own goals. So if you are saying, hey, I want to work with you at this CPA and I want this much volume per
Mm.
month, okay, well, you have to bring us a deal that justifies that,
Mhm.
beyond just the sort of your product features itself, but like, are you offering best in market rates or competitive rates? Like, if you're way below here and you're thinking, oh, I want to give you a $10 CPA, it's just like, okay, well, no, like it's just not going to ever work. We won't be able to supply that volume, and we're also not incentivized to promote you, like on a very literal sense. We're not incentivized at all to promote you. But if you're willing to sort of position yourself as, hey, look, we want to start this relationship off on the right foot, which some partners are amazing at this, of saying we're going to give more in the beginning, so that we want to get it embedded into your sort of we want you to rely on us so that you're constantly like finding ways to feature us and talk more about you in your content. Then you're going to get prime real estate. You're going to get all of that. It's not just going to be down to commercials again, but it's going to help, pretty significantly.
Can I just comment on that?
Of course. Yeah.
I'm so happy you said that. And for folks listening, I did not plant this. Just to paraphrase what you just said, paying a little more on CPA at the beginning. And I want to expand. I'll give you my reasoning for this. This is something I've proposed to clients. I put this out in my content. This is like the real shit of like building in this channel. I want everyone to hear very clearly, when a new lender shows up on a CPA deal, you bear all the risk, you and Finder, period. As far as like the commercial marketing agreement.
Yeah.
I've heard lenders tell me, no, I bear some risk too because the accounts might not perform. Let's put that to the side. That's a different problem, right? That's, if we're just talking from a pure marketing funnel, you're the one bearing the risk because you're displacing an offer. You have to put the new offer in. And if it monetizes worse, you just lost money. From their perspective, they're paying you like a vendor. Oh no, I wrote them a check. I made good. No. You lost money because of the displacement effect. So like that's what I want folks to internalize, is overbidding in the early days is smart because your funnel will likely lag the others that have been in there and have like dialed it in over time. And what I've told lenders in the past is like, be explicit about that. Mm-hmm. Like, don't show up and tell Zach you're going to pay $200 to the end of time. Tell him my normal CPA is at $150. Mm-hmm. That's where I'd like to be long term because that's what I think my unit economics can support. But I appreciate I'm going to convert worse than your other stuff. So in the first 90 days, I'm going to bid 200 so that you're not taking a bath while we're figuring this all out together. That to me is very healthy and smart from a lender perspective. The pushback I've heard, and Zach, maybe you can address this, the pushback I hear, is lenders worried that you will anchor to that high CPA forever. And when then they have to ratchet it down, bad things are going to happen. It's going to be viewed negatively in the partnership, et cetera, et cetera. So can you address that direct concern that I've heard in the past?
Of course. Yeah. One thing, I want to just touch on though, is that when you come in hot like that with like hey, we're going to give you a great deal, and this is like the best sales advice I ever got, was that everyone just wants to look good to their boss, right? So if you bring that to our salespeople are the extroverts at the company, right? They're going to be singing your name. They're going to be pumping you up, talking you up. That's going to and then that's going to influence the marketing team. And so there's that dynamic to it. Everyone just wants to look good to their boss. You do come in hot, and then you do want to pull back at some point. Say it's not working out. There's something wrong there's a drop off, right? It's subprime and you wanted prime or whatever. Our sales team is now incentivized to give you more, right? Because we want to keep you at that rate. Maybe you can't justify it, but maybe you could if it also came with a weekly newsletter push and a shout out on YouTube, and there's other ways that we can do to make you happy. And so I think that's what publishers are really good at, is saying, hold on, we offer more than just performance. We can also offer you this, this, and this. And maybe there's this page that we never put you on, and now we want to put you on here because we want to fight to keep that rate. And
Got it.
sometimes look, it's not feasible, and
Yeah.
they can't do it, but we're going to try everything we can to keep you happy. And I think that's ultimately what
Right.
you want, because we want to make you look good to your boss. Yeah.
Got it. No, I like that. That resonates of like how it kind of ripples through the org. I mean, just contrast it with a partner that's new to the channel, funnel's not optimized, and they're actually trying to make, let's say, like a CFO happy, and they're like, "Oh, we're going to bid 30% less than the average of the market. We're so smart, and we're going to get a better yield." I don't think that actually is smart. I don't think it gets a better yield. I think what that's most likely to generate is just like a fizzled out partnership, right? You're going to try it. You're going to conclude, hey, EPCs are well below the market because conversion's 30% lower and CPA is 30% lower. And then the compounding of that is like, you're not even close.
Yeah.
And I've seen this play out firsthand many times. So no, I'm happy you touched on that, Zach. Anything to add there before we change gears?
Oh yeah. So I think one thing that also doesn't get spoken about enough is having the proper tracking in place. If you're a new entrant, and you can't pass back end-to-end conversions, whether or not our leads are signing up, and we just have to take your word for it. That incentivizes us to sometimes not even want to work with you on a CPA basis, but a CPC, because we have no visibility on any of that, and we need to just know that you're paying for our volume one way or another. We like to see the conversion metrics on that so that we know how to scale you and how to.
That makes total sense. Yeah, to me, that's completely table stakes.
Yeah.
What are the 2 or 3 questions you ask to know whether somebody's got the right foundation?
Right. So are you on Impact? It's probably a big one.
Yeah. Well, Impact or Rakuten or CJ, there's Fintel, there's a bunch of them, right?
Yeah, Fintel, I think even Rakuten and Impact are combining at some point. I think I saw news there. Yeah. So do you have your tracking in place? What do you pass back? So do you only give us the payout event, or do you also give us the other stages in the funnel before that event happens? You know, we really like to, the more visibility we have, the more we know how to optimize you, and give you supply you the volume. So we want our life to be easier on that front. Also, you know, who is your target market? Who do you go after? Is it subprime? Is it prime? How do we actually need to work with you for this to be successful? So I think, the tracking and the success metrics up front are really good. And so I'm not sure if this is the same in lending, but you know, there's also the metric after the metric, right? So sometimes a lender or direct, you know, some partner will pay you on account opens, right? But that's actually not where the game ends for them. They want account opens, but they also want you to deposit $1,000, or they also want you to take out loans of this certain amount. Be upfront with that part of it as well. Yeah.
Got it. How quickly is that feedback loop? Is it daily? Is it hourly? Like what's your gold standard for reporting?
I think you need it statistical significance or something close to it. Like you need enough volume for us to actually make a call. So I like to give things a week before we call something dead.
Oh no, but I guess how quickly are they passing back the transactions? Like how often is that feed hitting you? Is it every minute, every hour, every day? Like what?
It varies by partner. Some are hitting us every hour. Some are hitting us as soon as the event happens, right? It's just as it happens. Yeah.
And is that an API you guys have built, or is it like a Google sheet? Like what's the format of the data exchange?
So we also work with Tune. I'm not sure if you've heard. Yeah. So we have that talking to Impact. So we have everything sort of talking to each other. So as soon as the event hits here, it moves on to this platform. That platform moves into our like dashboards.
Gotcha. Okay, cool. One thing I've noticed about all of this that I don't think that many lenders key into. I'm curious your take. Like if you buy media, I'm just gonna put us, we're May 1. Okay. May 1st, you buy media. You buy a click on Google. Okay. You're gonna send it to a lender. They're gonna convert it or not. You're gonna invoice that lender. The earliest they'll probably see that invoice, you're going to do the whole month of May. So they might see that invoice June 15th. Okay. And then they're going to have like net 30 to pay, something like that. So July 15th, you may get made whole on something you paid money on like May 1. So that's like 75-day float. Okay. That's not trivial when you're doing this at scale across a lot of categories. There's just like very, very real consequences to all of that. Do you ever get lenders that show up and say, you know what, Zach, I hear you on all this. I want to pay you faster. Invoice me faster. Let me turn it around in a day. Does that improve the relationship at all? Like, is there a dynamic there or a lever that lenders could pull to earn good graces with their partners?
Oh, totally. I mean, the faster the payouts happen, the better it supports. The more true the P&L and L and the cash flow sort of link up, and
Yeah.
that just makes everyone's life easier
Yeah.
on our end. So
What's
that's
the
a big.
norm, by the way? I made up what I think is going on, but is that close to reality or is it a little different?
No, most folks are paying on a net 30, net 45, and most folks will pay from the date of the transaction, or some folks will pay on the date from the date of the transaction. So
Okay,
it's not
got it.
just like everything you did in May; it's as it came in
I
30
see.
days. Yeah.
Got it. Okay. So maybe the cycle between your cost out and your revenue back in may not be as long as I
Yeah.
described. Um,
But that
I,
certainly does happen. Yeah.
yeah, no, I know.
Yeah.
I've seen it across. I've seen it go way longer than that too. I've seen net 90s in the industry, if you'll believe that. So, um, from a scaling perspective, let's say somebody's in, lenders in, and they get past the pitch phase. There's actually some dynamic that's working. What are the things you see lenders do that get them from like mid tier or towards the bottom of the list to like category leaders? Like what does that roadmap look like?
On our end, so like category leaders on finder.com, it is how well can we optimize you, right? And how much information do we have to actually do that correctly? That's why I think the data and the tracking is so important, because if we know, and some folks pass off so much, almost too much, right? It's like, okay, we don't even know how to use all of this. But, for example, if you offer loans for different use cases, right? And we're seeing that there's a massive, you're winning on the home improvement loan sort of category or the debt consolidation. We're like, okay, well, we have a bunch of content on our site that's specifically around that type of thing. And we didn't know that you are being such a successful partner for that loan purpose, right? For example, we can push you much more on, personal loans for building a new deck or remodeling your kitchen or whatever, to make sure that you're getting the sort of lead that's going to convert best on your platform, or has found you to be the most favorable for. But if you're one of the lenders, I remember SoFi did this back in the day. They might still do it, but they used to give educational resources to folks who took out their student loans.
Mm-hmm.
And so if there's folks who are really into that, we could position them on that front. Like, who's going to give you not just the loan, but the added support after. And,
Mm-hmm.
so we can build up these sort of demographic, psychographic sort of customer profiles that we can then use to seed you in the correct content. And that's how we really scale someone from, without them just paying an unreasonable amount and dominating everyone else. That's the way we scale you sustainably. Yeah. But if you're coming in and saying, we're going to give you $1,000 CPA on a converted loan, okay, I won't be able to fight my sales team on placing you, where you probably want to be placed. Yeah.
Gotcha. How important in your mind is streamlined application funnels? That's something I talk a lot about with my clients, but like your take, like what's world-class application rate? What's average? What's bad? Like, can you give us some metrics that might give lenders a sense whether they have a big problem here?
I honestly really like the bank rate. Sort of, they're a marketplace brand, but I really like their flow. They get you enough. It's one of the lead flows where you answer sort of one question at a time. And
so this is for personal loans.
This is for personal loans. Yeah.
Got
it. You're sort of going through that funnel. It's very simple, easy to understand, and creates that sort of illusion of progress because it's not one massive form of a million questions. You're doing it one at a time. It's much more digestible, easier. And we see those folks make it to the end more so than we see some of the other folks we work with that are like, tell us everything about yourself on one form and then we'll figure it out. Yeah,
that's interesting. In the lender context, the answer is I've actually seen it go both ways. So, and I can see why in a bank, from a publisher context, it might be different.
Yeah.
Here's the challenge I've seen on the lender side. customer shows up from, let's say, Bankrate, and now they're on the lender form. Let's just say they went through that 20-step thing on Bankrate. The last thing they want to see is another 20-step form. I'd be like, F this, I'm gone, right? So I just think the lender has to keep in the front of mind, what did the customer just do on the pub? And is my experience in congruence with that? Or is it going to like totally set someone off the deep end? Because I just, you know what I mean? So like, if I just came off a Bankrate's flow, I would want to put, if I'm the lender, I want to pull in everything Bankrate said and only ask incremental shit. And I want to keep it quick, man, because they just gave me a bunch of stuff, right? So versus I just came off of a publisher where I only saw a listicle and I clicked on a logo and I land cold on an application page. There, maybe I have a little bit more latitude to do what Bankrate just did because they're actually initiating the process on. So, like, there's just, I think a lot of lenders lose sight of the customer experience across the platforms. And I generally recommend actually that lenders keep their application forms really tight. I've seen one pagers do really well, pre-fill everywhere possible. For the love of God, do not ask for user passwords. Do not ask for plaid links early on. What else have I seen? Like, here's enter your email address as the first question.
Right.
I've seen this on forums. Marketers do it because they want to retarget, right?
Yeah.
Customers get it. They're like, okay, I'm just signing up for a spam.
Oh, yeah.
And I
Phone
don't even
number?
know what the value is yet. Like, no. Just ask for the email along with everything else.
Yeah.
It'll look like a lending application. Versus if your first question is an email, like, you're just getting entered into like some kind of nurture. Like people aren't dumb, right? So I'm seeing a lot of these mistakes over and over on the lender side. It sounds like your philosophy on it is pretty aligned.
Yeah, 100%. I mean, you amazing point. Anything that's like enter your phone number or email first.
When that's the first question,
yeah. Like no, there's no, and then someone will be in touch. It's like, okay, for sure, no. And you raised a good point about the last mile component of it all. If I fill out something like that needs to be passed all the way, when I go to the actual site where I'm with the lender, like I just need to be able to press apply, because I've just done all that work on that front. So really good call.
Yeah, no, and actually, there's a good plug for one of our sponsors, Spinwheel, because they're investing in a product called the network token, where if like you collect PII on the publisher side, they can publish like a little UTM code that goes to the lender, and then the lender can see the UTM code, kick Spinwheel's app, and then just pre-fill everything. It's not the only way to do it, but there's a number of ways to do it. I've seen many publishers just build their own APIs with lenders directly. The issue I have with that is it takes months and months and months in coordinating like publisher teams and lender engineers, and it ends up becoming 6 months to 12 months before you know it. And then by the time the thing launches, everyone's exhausted. No one's even excited about the damn thing because they've like wasted so much time building the integration. So, anyways, yeah, but I'm totally on board with if you can pre-fill what the pub just asked for. My experience having seen this about 50 to 100 times, 20% lift.
Oh,
so like a 30% application rate becomes like 36%, which in the context of your EPC, just raise your EPC 20% for free. Like you're not, it's not coming out of your pocket. So,
100%. I mean, there's a sunk cost fallacy component to it at all. It's like, I've done all this work, I have to complete it. But you're starting from zero again, obviously. Yeah.
No, I don't think consumers think that way. More friction is more drop off. I've just always seen it that way. So Zach, we have about 20 minutes left. I need a little break for 1 minute, but I want to give the audience a feel for what's coming. Some folks may want to hang out and jam with us, or they might want to leave. But I noticed you're personally investing a lot of your time in your personal brand across LinkedIn, across podcasting, etc., your Substack, etc. So I want to dive into that. It's something I spend a lot of time thinking about and executing. I think this would be interesting for any professional that's currently at a job, leading a company, leading a vertical, leading a business. That may be interesting for them. From my context, as a B2B founder, that's when I started leaning in. But as we talked about before the show kicked off, I really wish I had started 5 or 10 years ago, because I think I'd have a lot more leverage and knowledge of the space. So for anybody interested in that, we're gonna kick there in a minute.
Let's take a quick break in the action here, because I'd like to introduce you to our newest sponsor, Fintel Connect. They're an affiliate marketing platform that can help connect you to publishers, influencers, and manage your compliance. I'd love for you to check them out. You can find them at fintelconnect.com, FINTEL connect.com, where you can connect directly with their founder and CRO.
All right, everybody, we're back. Before we jump into the next section, just want to give you guys a heads up, especially if you're in the New York City area. We're going to be doing an event actually hosted by a organization called the AI Collective. They've invited me and a former colleague of mine from Credit Karma who led product. Her name is Supriya Gupta, and she's building a piece of software called Eve, the Executive Voice Engine, which is a product I use in my content. And we are going to host 20 fintech founders, and all we're going to talk about is content and how it can help build your brand and your business, and how events can actually supplement content. And if you've been following my LinkedIn, you know I've recently branched off into events. So I want to talk about what I've learned and what we're doing there. It'll be May 12th, Tuesday, so about a week from today, starting at 11 a.m., going to 2 p.m., and it'll be in the Soho neighborhood. I've invited Zach, so maybe you'll see Zach there. He hasn't confirmed because he just learned about it, but we'll see. Hopefully we see you there, Zach. Hosting lunch, and then kind of 2 hours of roundtable conversation. So I'm really excited about it. So Zach, personal brands. I don't know where to start here, but I guess I'll ask you this: what was your original impetus to get going on this? It's a long journey, as I'm sure you're aware. But what were your motivations?
Oh yeah, I mean it's one of those things where I all of the personality tests or whatever I've taken, I've always said I'm an extrovert, but I have to be on like the most introverted scale of that extrovert sort of scale. But it's just it's one of the last remaining moats, and it's one of the most powerful marketing channels left, is to have a personal brand and to have I guess something that is proprietary. And so, you know, I definitely have been, that's the reason I'm doing much more podcasts and doing the Substack, because I need to be able to build the knowledge around who I am from an entity perspective, from, you know, Google or at ChatGPT. If they type in who is Zach Ali, I need that information to tell folks why I'm trustworthy or credible or whatever in any project I'm doing. But it's also almost becoming a new channel within itself that is going to become sort of default. You have to be in it. Just because of how commoditized everything is getting by AI. And I actually think I saw you sort of in the beginning days starting your personal brand. I think that's been extremely impressive to watch. And I feel like I can definitely say what I'm doing, but I feel like you have much more advice on this front than I do. Yeah.
Yeah, no. So when did you get started, Zach, on your journey?
I started last, well, there's two phases. So my first startup, when I was still living in like Northern Virginia, was a news company startup. And so to work in news, you had to be on Twitter at the time. You had to be breaking news. And
give us the year. Give us a marker here. 10 years ago?
Yeah. So started it in 2015.
Got it.
Sort of spun it down, around 2018.
So you started building your brand on Twitter in that era? Okay.
Yeah, I started building it on Twitter.
You started like 6 years before I did.
Yeah, well, yeah, I did on the news thing. So it's almost like every vertical you're in, you have to sort of start from scratch a bit.
Gotcha.
So
yeah.
I had just gotten so sick of talking about politics and news. So I was like, I don't want to be here anymore. It's toxic. But you can still see on my Twitter, I don't post anymore, but I grew it to like 10,000 followers or whatnot.
Gotcha.
Just by consistently every single day making myself.
And you're posting on behalf of your organization or your personal takes on stuff?
You have to do it as an individual. I think that's the part that is lost on a lot of folks especially organizations where they're like, oh, we need to have a pop in Instagram. And it's like, no, your brand is never going to be a huge sensation, or very unlikely it's going to be a huge sensation within itself. It's going to be the employees and the founders and the folks who work at your brand where people can see a face behind it that is actually going to build that relationship and that trust that you're after. And so, yeah, that's sort of been, that was the approach then. That's the approach now, is that Finder, when someone goes to finder.com, they're not seeing, like, it's not somebody, it's a faceless corporate brand, right? But if they know who Zach is, or they know who Matt is on
Mhm.
YouTube, now all of a sudden there's something they can connect to. There's something they can project onto and say, okay, I know this person because I see them posting every day, or I
Right.
see how they talk, their jokes, their comments, replies, whatever.
Got
Uh,
it.
that's sort of the impetus there. Yeah.
Got it. Yeah, when I got going, about 4 years ago, it was almost exactly. It was May 25th, 2022. So I'm a little past the 4-year mark. I'm in year 5 now. Pretty much nonstop daily content for 4+ years. But for me, it was actually very simple. I had just gone through a round of job searching. I just wound down a startup I was working on. I wanted to get back into fintech, as a marketer, and I was looking for like a head of marketing, head of partnerships role. I had just been at Credit Karma for 4 years,
Yeah.
and I had wrongly assumed that because I had been at Credit Karma for 4 years, that I had high brand visibility and recognition, and people wanted to work with me as an expert in my niche.
Yeah.
Wrongly assumed, because as I was having these conversations with fintech founders, fintech executives, they flipped the table on me and they were like, "Well, prove to me you know anything about what the hell you're talking about."
Right.
So rather than have a constructive conversation on their strategy or how I might help them, we're having a much more primitive conversation, which is like, "Prove to me you're even worth my time."
Mm-hmm.
And I got extremely frustrated having to spend time there when I knew I was probably top 1% in what I do. So that was the spark for me to say, "You know what? That's on me. That's not on them. I need to get public around my stuff and I need to talk about it, write about it. I just need to be on all the time so that when I am looking for a job, people are like, yeah, of course, no, yes, of course, Carlos is an obvious candidate for this, right?" So I came at it from that perspective of I just want to be marketable. Like when I'm changing gears in my career, I don't want to have to spend my time on this annoying conversation when I'd rather be talking about how I can help that potential company. Is there a good fit, etc. So I wanted to just accelerate my networking, basically, and then it evolved, obviously, from there. But is that where you're at now? Like, are your motivations similar to where I started, or are you thinking you have a different narrative?
Oh, they're totally the same.
Okay.
Social proof. That's what we're talking about here.
Yeah.
It's the fact that you've made my life easier because you're so visible. I know if I ever have a question about lending partnerships, literally I will think of your name and no one else, and I'll just go straight to you. I know you're qualified because I see you constantly demonstrating that you're mastering your craft on this. You're constantly talking about it. You have a newsletter about it. You have a YouTube show, a podcast. Everything about you says, I can trust you on this and that you're qualified. And that's the same sort of approach I'm taking is, look, AI is fertile ground, and there's a lot of misinformation around it, especially in the ways it's changing marketing. In fintech as well, you also have to have there's a high barrier of trust you have to meet for folks to get you. So I need to be visible, because that could be the differentiator between someone coming to
Mm.
an underdog like Finder or an incumbent like a NerdWallet. And
Yeah.
I actually think it's a great time for lean organizations actually to be doing this, because there's less of you, there's a lot more cultural alignment,
Mm.
and there's a lot more, I guess, surfaces that you as the founders or the founding employees
Mm.
can be on that is going to build that trust and have sort of a multiplier effect about it. And I think you see that with organizations like Anthropic, which I think is sort of like the benchmark for what it
Mm.
looks like to have a top-down approach to visibility and building relationships with your actual customers to bring in net new customers as well. Yeah.
Yeah. Yeah. Okay. So You're doing when I remember when I was at Caribou full time. It's a fintech you may have heard of, auto refi. That's when I started kind of going hard on LinkedIn. That was my time at Caribou while I was kind of getting going on my creator stuff. That was this on hard mode. I'll
Yeah.
tell you why. A full-time job,
Hmm.
calendar stacked with meetings, corporate computer,
Yeah.
my personal computer somewhere else in the room, which I'm watching, but it can't really because I'm stuff to do, right? I happen to have one young kid. I have two young kids now.
Mhm.
So there's family responsibilities, and then there's just like creative energy to just because if you're gonna post bland, meaningless stuff, in my opinion, just don't do it because that will take. There's a version of negative personal brand, and I see that active sometimes in LinkedIn feeds where I'm like, dude, you should have just held that back. You would have been better off saying nothing than what you said. So like, there's downside risk to this as well, in my opinion, especially on LinkedIn. But I guess first question for you is like, what? How do you find the time? And like, what's your general rhythm? How do you work it into like a full time GM type of schedule?
So I definitely don't post as much as I could be, and I want to be doing more. But it's you have to just realize it's part of the job. Like it's not extracurricular anymore, and that is the biggest mental hurdle I had to get over in order to embrace this the way I needed to. Um, and once you do that, there's a bit of the sort of effect that happens, like you don't have time to do, clean your house, but when you have company coming over, all of a sudden you have all the time in the world to clean your house. And so it's that idea that like, hey, this is a mandatory prerequisite to actually being in the marketing space, for going forward. Like, how can someone and it's like the employee that is really good at their job and thinks the work is going to speak for itself,
Mhm.
never realizing why they're not getting promoted.
Yeah,
And it's the same dynamic at play here. And so I have to be highly visible, to show you that I actually know about marketing, because this is what a marketer does. They this is one more distribution channel and one of the most important distribution channels of the future. If I'm not mastering it myself, then how can you trust me to master it for your
sure.
business?
Yeah.
Yeah.
So is your routine? I see you on the podcast circuit, so I see a podcast to mention. But walk us through like what's is there a daily rhythm you follow?
Yeah, so I have, my notes app on my iPhone is filled to
Okay.
the brim
Okay.
with.
Same.
I'm one of those people that can only write when I have inspiration, when I feel
Okay.
inspired. So
Yeah. Same.
at least
Yeah.
something happens every week where I'm like, yes, that's it. That's what I need
Okay.
to talk about.
Okay.
And so that's what I'll
Are
use.
these voice memos or you're typing in on your phone?
I haven't gotten onto the voice memo kick yet, but I know so many people that's like that works so well for them that they can just stream of consciousness into it, push it into AI, get the summary version, and then
That's exactly my play. So
yeah,
I'm on a walk. I
yeah,
fire up Riverside because it transcribes it automatically. I
yeah,
pull down. I don't even look at the audio. I just take the transcript. I feed it into AI. I get drafts,
yeah.
and then by the time I'm at my desk from my walk, I'm reacting to drafts of the stuff I just riffed on. Yeah, it's once you're in that routine, it's actually pretty. It's an unlock for me. So
I
yeah,
need to do that more of that. I was using that. I mean, that's a pretty sick
yeah,
routine. I was
yeah,
using notebook.lm with Google. So I would stream of
yeah.
consciousness into that, and then it
Yeah.
turns it into a podcast. And so I'd
No,
listen to it.
that's I've
Yeah.
played with that too. I haven't
Yeah.
figured out how to use that as a like a creative asset yet.
Mhm.
I am blown away by how good it is, though.
Yeah, really good. But that's it. And also, there's an
Yeah,
accountability portion to it as
yeah.
well. So I do the Forbes Business Council thing where I, put my, I write articles
Oh
about.
yeah. So how did you initiate that relationship? I saw that. I was like, oh, that's really cool. How'd you do that?
Yeah, so I saw someone. I was reading one of the articles, and I saw that this was like, hey, this is part of Forbes Business Council, and so I just applied after, on a whim, and just said, and so someone from Forbes Business Council will call you and see if you're a good fit and if you're legit, and if they think you are, they invite you in, and then you have, the ability to publish on their platform.
Oh, that's awesome.
Yeah, so that keeps me accountable too. So it's like I have to publish on this. So I have to have.
How many pieces a month do you owe them?
It's not necessarily that you owe, but there is a subscription component to it because it
Oh, got
also
it.
gets you, into certain rooms and
Oh,
network
I see. I see. Okay,
components.
so you have like
Yeah,
You're motivated
get my money
financially
worth.
too to make this thing happen. Got it. No, that's actually I want to linger on that for a little bit because there's something very real about what you just said, which is the second you start throwing money at your content routine is the moment you're like, hold on,
Yeah,
I'm spending money on tools, AI. I did that stuff very early. I mean, Canva, like not huge checks, right?
yeah.
These days I'm writing bigger checks, but early it was like $20 to $100 a month I would spend on things that just facilitated.
Mhm.
And any month that would tick where I didn't feel like I used that tool, I would feel guilty. It would like it
Yeah.
actually did provide reasonably good motivate for the dollar amounts at
Yes.
stake. It provided disproportionate motivation. So there's something to that. Yeah.
Accountability is the hardest part. Like next to
Yeah.
consistency, like how do you keep yourself accountable? And money is a one of those things.
Yeah. Well, I'll tell you another one, another hack I did. I don't know if I stumbled into it by luck or if it was good instincts. But my business partner on my newsletter, Nick Madrid, so I'll thank him for this role he plays. We agreed in October 2024 we were going to publish weekly, like pretty much forever.
Mhm.
We've missed maybe it's been 70, 80 weeks. I think we've missed 3 weeks,
Wow.
and it might have been like Christmas week or who knows. Like sometimes things. He has young kids too, so things can get crazy. But having the business partner that's like, we're publishing some shit this week. We don't give a crap. Let's go. That's a big deal. It's like the workout buddy. It's probably the right analogy. So yeah, that's been a big part of my routine.
Oh, totally. I mean, that's a good point too. I think doing the solo consultancy thing, I did it for a little bit. The second you don't have a Slack you can go to, and it's just you're not talking to anybody. That plays on your mental a little bit and in the
It
way
does.
you work.
Yeah.
Yeah. Yeah.
Yeah. No, it does. Tell us about your newsletter. I know you mentioned you have a Substack. What do you write about, and how do you get inspired for content?
I have something locked into the drafts now that I need to post, but really it's like as I'm not everything I'm writing is like perfect for Forbes, and sometimes it's just my ramblings
Mhm.
or random inspiration. So I locked down the domain thoughtson.substack.com where I was just going to put my thoughts, very raw, right? It's not going to be super edited, whatever.
Yep.
But I just wanted to give my thoughts about where I feel like AI and marketing are intersecting. And
Mm.
so, also like around the discourse, I think there's a lot of follow the herd mentality, especially in marketing, where okay, now this is the new thing, and we're going to just all talk about this thing, or this is the new prevailing idea that we're all going to lose our jobs to AI or whatever. And so everyone just starts parroting the same things, and it's like, well, actually, I wanted to have an outlet for my actual thoughts on these subjects, and so that's what I've sort of been using that Substack for, and I definitely want to do more on it as things have evolved from there. But
Oh, so that sounds like it's broader than just publishing and like the conversation we had earlier. It sounds like you would cover all sorts of stuff, including AI and automation and a whole bunch of other
oh,
stuff. Yeah.
100%, yeah, I
Yeah.
think I'm a
Yeah.
generalist at heart. Yeah.
Okay. Um, quick. This might be a quick tangent, but I'm curious because like when I heard your other pods, lots of chatter around vibe coding and Claude, and I just want to get a download here. Your setup. What
Yeah.
computer? Like, let's talk hardware and let's talk software because nowadays people have Mac Minis on the side and they
Yeah.
have like the game is changing pretty quickly. And I'm here. Actually, there was a news article yesterday. Apple just raised the Mac Mini price from
Yeah.
the bottom was $599 and now it's $799 because they're just getting like the demands like just outstripping supply. So yeah, talk us through that. Like, what's your stack look like these days?
Yeah, so I don't have the Mac Mini yet because I wasn't doing the open claw because people were getting their
Letting it run wild.
details.
Yeah.
Yeah, exactly. But I'm on like the highest spec'd out MacBook Pro you can get
Okay.
on my
So
personal.
was that 64 gig or how much memory?
Yeah. It's
Okay.
I think it's 128.
Okay.
Yeah.
Okay, so you're hardcore. You're leaning in here.
Yeah. I mean, it's just like RAM is the most important thing. It's only going to get more expensive probably. So I got a really spec'd out computer. I'm on Claude Code. I actually use Claude Code desktop and web
Okay.
all throughout the day for different tasks. Claude Code is on another level. Like it's
Okay.
truly one of those magical sort of pieces of tech,
Okay.
especially after December 2025, where there was this big step up. And
Yeah.
now it actually is, yeah, it's a game changer. It's frightening in ways and mind blowing in others. But
And do you have it on your machine you use day to day, or is it guardrailed off on like a separate laptop?
so I have my work one and I have my personal one.
Okay.
And on my personal one, like I am paying for the max tier.
How much is that these days?
So I'm on the 5X, which is 100 a month.
Okay.
I'm not on the 20X one, but I probably will upgrade at
How
some
much would that
point.
one be? The next level up?
200 a month.
200. Okay. Yeah, I'm on that one I'm on like the highest plan for Google right now.
Yeah.
And the Gemini deep research is quite good.
Yeah.
But I think I'm gonna downgrade Google and give the $200 to Claude
Yeah.
because I see a little bit more upside now with some of the tools they've built.
Oh yeah.
Yeah.
It's quite, yeah, it's something else. And I'm definitely down to help with your setup too when you get started, because
Yeah.
I don't know, the growing pains of getting onboarded to do it successfully with, like, how you manage your memory and the skill files and the knowledge, how that all works. There's not a lot of information out there on it, but it's I don't know, it's one of those things that, like, if you are someone who has a lot of good ideas um, and wants to do a lot more in the day and doesn't care how it's done, you just want to get it done. Claude is like the ultimate, yeah, machine.
Cool. Yeah, no, I've noticed myself going back to Claude with like similar prompts
Mhm.
over and over, and I'm like, whoa, hold on. This needs to be like a thing where in one line I know, hey Claude, I just want to do this invoice thing for a client, or I want to do this like personal finance calculation. What, like there's stuff I do over and over.
Yes.
So I think I have very crude ways to do them quickly now.
Mhm.
But I think I need to build the skill files, the context files. Like I'm getting more immersed now in like the AI pods. Let's talk pods. Where, if I wanted to get ramped up, newsletters and podcasts that just help me become a better practitioner, what would you suggest?
Um, so there's one podcast you probably heard, but Lenny's podcast.
Yeah, I'm all
is
over that
really-
one. Yeah, that's a good one. Yeah.
That's that's like my go-to for on
Yeah.
the podcast front. And then I just
Yeah.
have a Twitter list that has basically everyone who works at Anthropic.
Got
And
it.
they're constantly tweeting. There's constantly influencers talking about what they've built.
Oh, Anthropic
Yeah.
employees are going hard on Twitter.
Oh yeah, that's why I say that they're the benchmark for an organization.
I'd love that list, man. That
Yeah.
sounds great. Okay. And if you don't mind, maybe we can post it in the show notes here, so people can take your cheat sheet and run with it.
Totally.
Cool. No, that's awesome. How deeply embedded is AI in your content routine?
Depends on what part of the content. So we still very much have a lot of human oversight on every written word that gets written. We still don't know how Google thinks technically about AI content, and
Okay.
we don't want to. And the AI isms are very easy to spot too. Like it's not this, it's that. You see it on LinkedIn a lot.
Yeah.
So there's that part, but like everything behind the scenes, it's like a mad dash to automate, improve, rebuild the system from scratch, because a lot of people's first instincts is to apply AI to an existing system instead of actually taking a look at that system and saying, does it need to exist? Should we do it this way now with the tools that we have? So that's been something I've been thinking about personally at the day job, and actually spearheading for Finder, which is how do we actually bring our processes into this new world where AI can do the thing, can do the tasks, and you become more of the orchestrator of those tasks.
Got it. To close out and I know we're a little over time, so hopefully you have a couple minutes to wrap up here. All right, cool. One of the things I struggled with early in personal brand is knowing or having objective signal on whether or not it was working. Okay. Because of what I found early on was I could write a feel good post that was just empty as hell, didn't have that much content, but for some reason hit some kind of emotional chord, and it was like 300 likes. And I would look at that and I'm like, on the surface, that looks like success in social media.
Yeah.
But I knew there was no depth to it. No one was knocking on my door offering to hire me. Like nothing tangibly good was coming of it, other than that like dopamine hit of, oh, people like it, right?
Yeah.
So I guess what's your personal framework for knowing whether the stuff you're putting out there is actually doing what you want it to do?
So I had a funny moment recently where I don't get the most engagement on my posts. So I post a lot of the podcast recaps, my articles, the premises. Like I don't do a lot of the free posting of, oh, I just got hit with this thought and I'm going to post it on LinkedIn that I should be doing and I want to do more of. But I went to an event recently, a couple months ago, and again, I'm getting like a good day for me is like 20, 30 likes, right? So I haven't really played the game as much as I need to. But at that event, it was a company event in Sydney. I had bunches, so many people come up to me and say, "Hey, I was listening to your podcast on this. I love what you
Mm.
said up." So you don't actually always see it in the
Yep.
engagement metrics. It's something that a lot of people are just lurking on these platforms. They're not liking every post, but they see you, which made me feel really good about it because I was like, look, if I was judging how well I was doing on this by just the like count or the comment amount of comments, I would feel like I'm not doing it correctly. I'm doing something wrong.
No, you nailed it. You
Yeah,
nailed it.
that's it.
Well, so you nailed that. You like people in real life will comment. Will tell you, "Hey, I saw this. I saw that. I had a. I liked," and they can name the specific piece. That's the other thing I think is important.
Yeah,
Not just I like your LinkedIn, but I liked when you said this specific thing. Because now you're connecting the dots. You're like, oh man, I wrote that 2 months ago. I even forgot about it. But this individual remembers it and is mentioning it to me. Like you can just start to see the depth of like what you're building. So I've seen that too in my content. And I started picking that up like maybe the first 3 months. So like that tells me you're onto something. From a monetization standpoint, it didn't click for me until I started getting inbounds on DM from left field. People who had never commented, never liked, I didn't even know were connected to me on LinkedIn would be like, "Hey, I saw you wrote this thing, really interesting. Can we chat?" They wanted to pull me into real like conversation.
yeah.
That's when I was like, "Oh, maybe there's a sales pipeline here,
Oh yeah.
and maybe I should actually quit my corporate job and start an agency because people seem interested in like the stuff that I know."
Hmm.
And then my like my real dilemma was like, okay, well, when do I make that jump?
Yeah.
How do I know how much they'll pay for it? Can I even close these deals? Even if I close the deal tomorrow, like how am I running my full-time job and this
Mhm.
side engage? Like there's all sorts of stuff. That's when
Yeah.
it got really hard for me at that transition period. But the cold DM to me is like
Oh yeah.
top signal, especially if it's dialed into your ideal buyer.
100%.
Yeah.
Another thing is I've seen, not it didn't happen to me personally, but a lot of people will build what do they call them? The lead magnets, right? So
Hmm.
they will have a PDF or a spreadsheet or something that the user can download if they
Yep.
comment, or they'll just give it away for free.
Sure.
But I watched someone create something that got shared back to them, and the person who shared it back to them didn't know. So it's like that's how you know
Oh.
you're adding value. But there is another part
Oh,
I
that's good.
want
So
to,
the creator of the piece
yeah,
received it from someone in their work and said, "Hey, I think this could help you. It's really good." Okay.
right, yeah,
Not knowing they
exactly,
wrote it.
right.
I don't think that's
Uh,
ever happened to me, but I'll text you if it ever does. That sounds cool.
the amount of downloadables that get shared across Slack from and then it makes its way up to the highest decision makers. I think that's one thing that other people don't you don't have visibility on, which is like, hey, if you create this really good tool, and that might have a better shot of getting you to the target audience than cold DMing the
Oh
CFO or
yeah.
whatever it is.
100%.
And then just
100%.
yeah, there's so many ways to skin a cat these days. But
Yeah.
the other side of posting is sort of the social fear of posting, right? But it's just releasing. You got to realize how ephemeral it is. People aren't spending more than a few seconds looking at your post. It's the over time post that builds that connection in their head. Yeah, it's not the hey. It doesn't need to be. You don't need to create the Mona Lisa on every LinkedIn post. It's just post and then move on.
Yeah, no, I agree. And like I've always tried to reconcile the fact that there's two things I see often on LinkedIn,
Mhm.
and they seem diametrically opposed. But I think I have my framework now for why they can both be true. People who say, like your example, I wrote this thing 2 months ago, and people remembered it, and now it's valuable, and like they have a deeper connection with me as a result. So that's the universe where the content you write has long lasting value and can be recalled over a long period of time.
Mhm.
And then there's the other thing that seems to be in conflict that says, hey, when you write something bad, don't worry about it because everyone's just going to forget it.
Mhm.
It's like, hold on, how can both things be true? How are they remembering the good, but then the bad they're just glossing over and never coming back to it? And here's the story I'm starting to tell myself now. When something hits with value online,
Mhm.
you remember the source of the value because it actually freaking helped you somehow. Okay.
Yeah,
Like you were like, oh, cool idea, Zach. Let me try that in my job. Or like, when you see something worthless, how could you possibly contain all the worthless things you've seen on the internet? There's like
exactly.
thousands per day. Right?
Right.
You're not going to recall the source of every not helpful thing you saw,
Right.
which is why that lives in a different container and why not it may not matter as much. The thing I'll maybe there's a third category of thing. I think this does apply to like professional brands on LinkedIn specifically.
Mhm.
If you're starting to talk badly about brands,
Yeah.
if you're starting to take people down, you're operating with a bad vibe.
Mhm.
That's a different container. That could
100%.
destroy your personal brand. That could do long-lasting damage.
Yes.
If the way you phrased you're trying to be helpful post didn't land, people will let you off the hook for that.
Oh,
But if
100%.
you're actively trying to be negative or damaging to someone else, people might remember that for a decade.
Yeah.
So like that to me has helped. I don't know if that lands with you, but that's how I've been thinking about it.
Completely
Yeah.
lands.
Yeah.
One, I was on LinkedIn twice this morning. I can't remember a single post, right? So you already know that that gets cached immediately.
Yeah.
It doesn't.
Yeah.
So there's two ways to be memorable, I think, on LinkedIn, and you just described the one you don't want to be memorable for. So you
Yeah.
can be memorable for helping someone, and that's that post that really just spoke to that person or that group of people where you added value, and that like you can't try to speak to all 10,000 of your followers in every post. Sometimes it's just going to hit that 200 that it really matters to. The other way to be memorable is for negativity, and you don't want to be memorable for negativity because that is also going to stick in people's brain. It's like, oh, this
Right.
guy's kind of a jerk.
Yeah.
Yeah. So be memorable for being helpful, or be forgettable for not being helpful, but don't be memorable for being negative.
Yeah, no, and I can actually think of a couple accounts just off the top of my head where I
Yeah.
couldn't tell you exactly what they've said recently,
Mhm.
but there's a vibe about the writing or the attitude that all I know is I would never do business with those people.
Yeah.
I don't care how good they are at their craft. I don't care how much value they can bring. It just doesn't resonate with me on a human level, and like they're gone. And whenever I can unfollow or like cut that out of my life, I'm very quick to do that because I don't have the energy to be dealing with that kind of stuff, right? And it's actually one of the reasons I left Twitter after a little while. It started getting overly political and like just kind of crazy. And I need to find a way to make because there's a lot of good on Twitter too. You mentioned some of the good that you're getting from it, but I haven't found a way to re-engage yet. So maybe I can re-engage just on this thread of AI and like productivity and stuff like that. But I had too much crazy stuff land in my feed.
Yeah.
So
So I was in the
how do you
same boat.
curate your Twitter feed? I'm curious because you said you had that challenge earlier in your career when you were working in politics. Like, how do you keep that on the rails?
I just use the Twitter list, so it's only the accounts I want to see. I don't use any of the
Gotcha.
For You page or anything like that
Okay,
anymore.
so just your list. That's it. Okay.
Yeah,
Is doesn't it default you to the For You tab when you every time you
it
come in?
does. So you got to quick swipe, do a quick swipe out.
So
Save it.
you gotta actively ignore Elon, whatever the bot's
E-
sending your way. Okay.
Exactly.
Cool. Zach, this awesome conversation, man. Thank you for joining us. I know we went a little over time, but super fun conversation. Where can people find you if they want to continue the discussion with you?
Yep. So I have I'm on LinkedIn. I'm on Substack, thoughtson.substack.com. I'm also on Twitter and Blue Sky. I don't post as much, but just Zach Ali on there. Yeah, you can find me there. I think LinkedIn is probably my most active platform. And also, if I'm doing my job right as a marketer, you can probably just search my name and in Google and find me there.
So yeah, no, I saw you said you wanted to own your name.
That's
So,
it.
how are you doing on that front, by the way? I'm curious.
So the other Zach Ali has struck back. I'm in the Empire Strikes Back phase where
Yeah.
he's doing a little bit more press now. So I'm trying to overcome him.
Yeah, no, I still think I might not even be in like the top 3 or 4 on my name, to be honest with you. In my niche, I think I'm doing good.
Yeah.
Um, Mostly because there isn't another Carlos Caro in my niche, so like I win by default in fintech lending. But in the world, there's a Cuban drummer who is just like prolific and just so many albums and interviews, and just like he's the guy normally I see. But it's good to have long-term goals, and
Yeah.
maybe I'll
Take
get
up
there one
drumming.
day.
Yeah.
Cool. Well, Zach, pleasure to have you on the show, and look forward to doing this again sometime.
Yeah, likewise, and hopefully see you at your event. Yeah.
All right. Yeah, that'd be great.
I want to take a quick break in the action here. If you want to support the show, the number one thing you can do is go to thefreetoaster.com and sign up for our newsletter. You're going to get a couple pieces per week of news, information, insights, and podcasts like the one you're listening to right now at the intersection of marketing, lending, and technology. That's our niche. We don't plan to go outside of that. It's the only publication I've seen out there on the internet that dials into this zone. So if you want to support us, sign up and share it in your favorite Slack channel. This is a quick plug here for my marketing agency. It's called New Market Growth. We do nothing but help fintech lenders accelerate their growth in affiliate marketing channels. Our services are both strategic and operational. And if you want to learn more about how we can help you, find us at newmarketgrowth.com or email me directly at carlos@newmarketgrowth.com.